we would have lost the ground. We would have not taken that seriously. And again, it comes from the top and it has to percolate to the bottom again and again.
50 PMs, 23 designers, 400 engineers.
We have
all of it goes to making that app work.
And my entire product order is, for example, slice and dice into some verticals and some horizontals.
A lot of people with a lot of experience, some experience, relevant experience. What kind of profiles do we pick?
Today, retention is spread across product and business. It's not, by the way, either or. It's and.
Hello and welcome to the State of Retention Marketing podcast. This is your host Ankur. I lead everything growth in marketing for WebEngage, and here's a conversation with a bunch of leaders from the product, marketing, and founder ecosystem to talk about the what, why, and how of retention marketing. We feel there's a lot of room for education in the subject of retention marketing because it's just so new. So we're actually partnering with Economic Times Brand Equity to actually bring retention into a mainstream conversation. I hope you find these conversations insightful. Thank you for the listen.
Hello and welcome to yet another episode of the State of Retention Marketing podcast. Today we have with us Ankit Rastogi. He's the Chief Product Officer at Angel Broking. He's had a fairly interesting career in the travel e-commerce space, has his own startup as well, and then now he's leading product for a traditional legacy organization which has transformed itself into a very, very consumer-friendly front end. Competing with the best in this category, competing with the most aggressive digital native companies who are getting people to invest in the stock markets. Thank you so much for joining us, Ankit.
Thank you.
Awesome. So, maybe we'll just start with a bit of context on Ankit's journey. What led you here? What's been the major points in the journey?
I was a techie. Most of us have been in that genre. Gold medalist, com science guy, geeky. Did 3-4 years of that. Figured out that how I can move on. Then I think the best part happened. Instead of a great fancy MBA, probably opted for the entrepreneurial journey, which was not that cool in those days.
Sure.
This was a stint from 2008 to 2013, I would say, close to 12 and 13. That was a travel commerce. We were trying to sell way early when there was no 4G, no Geo, no mobiles.
Sure.
And that led to joining as an acqui-hire travel commerce. And that after that, a decade of travel commerce where I saw all the aesthetics of how Flipkart and all that boom came in, right? 2014, and India started actually transacting on mobile.
2014 India mobile, sure.
Correct. And then
the first time mobile apps became a thing.
Absolutely. We had that episode of going only mobile. Right.
Which was kind of very random,
which was very random, right?
Premature, but yeah.
So with those nuances of how assisted sales used to be the key there,
the
right? And a lot of trust on overall internet marketplaces was very difficult. I think these were the very early stages. We had some cool hacks there at that time. I was with GoIBibo as an acqui-hire mode. We did something like, I remember still a engagement hack of how can we have photo reviews instead of, because it was very tough for people to type in those mobiles, Blackberries, and those used to be the days, right? Swipes were still not there, right? So, but clicking a picture was so cool, right? So, but then picture comes with you need to do a lot of checks which was not there, right? AIML was not there, right? You can have profanity, you can have something random coming in. So those kind of things were learning. One interesting part in those 10 years was the entire ecosystem of how in travel commerce was how the seller facing systems also work, because you need to have a bunch of suppliers, and suppliers were, I would say, tier 3, tier 4, they were small hotels, large hotels, luxury, they had distribution challenges, they had brand challenges. So how do you bring to the customer uniformity and trust that this is what you're purchasing? So the entire UGC kind of came up, the entire play on content came up very strongly in travel, right? The entire hiccups of post-trade, okay, if you don't like it, right, you're traveling for a great honeymoon break and something goes wrong, right? How do you ensure that those experiences are taken care of? I think those were some large journeys, right, which ensure that the customers keep coming. It was a less frequency product, by the way. Travel used to be less frequent. These days, I think it's like on the way. I think every weekend now in Bangalore, we figure out where to travel. So it has become almost like homogeneous as e-commerce, right? And then, yeah, I think all the product and business learnings, I thought like the time the COVID struck, I thought it's time to move on. And probably up my own, challenge myself for more challenges, right? And then this opportunity came in. And thanks to, I think, Angel's board, the entire management, they were looking for risk takers who can come in from a digital first background. And then the company was looking for this transformation bottom up. Okay. And this is not just people, it's also cultural, it's also the way we brand ourselves from a financial stockbroking company to a fintech or born in Bombay. I was privileged to be probably one of the first few leadership hires in Bangalore. And that's how we started the Bangalore place. And then a lot of incoming talent came in. Now we have the best in class from Amazon, Uber, Walmarts of the world. And then, yeah, this journey also kind of conquered with the scale post-COVID, which almost all the fintech has seen. And thanks to the India stack, I think brilliantly contributed. Whether it's eKYC, whether it is UPI, which has enabled, I think, the reduction in the transaction rates, failure rates. And the general, I think, participation in the retail equity space. I think, yeah, we have been blessed, I think, that way. And the scale we have seen in the last 3 years has been humongous. So today we are in the forefront. I think the top 5 players contribute to almost 70-80% of the new acquisitions in the market. That also, as you mentioned, comes in the challenges of how you retain and engage with this deluge of people. So that's how we.
So, Ankit, would be lovely to double click on the whole aspect of angel broking being what, a 25-year-old organization. The promoters deciding that we want to play fintech, in some sense, maybe inspired by all the action that's happening in the digital ecosystem, and then deciding to bring somebody like you on board with the level of mandate to build out this entire organization, right? And it's been what, a 3-year journey?
Yeah.
Something like that?
Absolutely.
How about you just tell us about the initial days of how this played out?
I think this has been quite a challenging ride. I was, I think, as I said, blessed by some more CXO leadership. We joined. We had a CEO who came in. We have a CTO. We have a lot of other leaders who have come in. Our entire Bombay leadership has also been fantastically supportive, and they have also looked up to this. But yeah, initial days, it was quite a challenge to hire, for sure.
Of course.
Right. In fact, the tide has completely turned now. I think the number of people we see today who are showing an inward interest just on our LinkedIn page has scaled humongously, I think. We have been, by the way, just yesterday we were announced as the top 50 in GPTW within the millennial category.
Okay.
So, right. So, I think.
Great place to work in case you didn't know.
So that, I think, has been a constant evolution. Beat our and then I think everything has played there, right from the people culture. Culturally, we have been a very
in some sense, Ankit,
younger place now.
So in some sense, what I tend to see as a struggle with traditional companies trying to go through this whole digital transformation curve is the constant conflict between the legacy mindset, the people who've been around for a while, and those are people who've done technology to the level of the SAPs and the ERPs and whatever systems had been brought in back then. And now when you talk about agile systems and Scrum and all of those kind of things, which are very normal and natural to new economy ecosystem, there's a degree of dissonance. So in some sense, what you're saying is Bombay versus Bangalore. Bangalore is the entire tech space, which means all the people who are brought in here are the ex-Amazon, ex-Uber, so they talk the same language. And these are people you resonate well with as well because you come from a similar background. But there's not as much, let's say, interference or dissonance which was with Bombay in some sense.
To some extent, but I think the one way where we were, I would say, already pro towards tech is that I think the promoter and the board, as we said, that though we were based out of Bombay, I think the utilization of technology to solve the problems, even when we had physical offices, was always there. So that mindset just kind of helped.
Tech first.
Absolutely. Okay. Whether it was driven by vendors versus in-house team, whether we had some ways to make it work, right? I think we were ahead of the curve that time also. Just that I think the entire team coming together, in-house, okay, and as I said, clubbed with the ecosystem itself booming up. Okay, it was almost almost like at the
course.
right time.
The good tailwinds from the external ecosystem as
Absolutely.
well.
And
Absolutely.
I would say the risk appetite, right? That and the trust, the entire management kind of trusted with us. And for example, we took the decision of just changing our app. Okay, that was one of the largest ever migrations we did. When I joined in 2.5 years back, still we had close to 1 million DAU. Today we are blessed with 2 million plus. Probably it was slightly less than 1 million. Okay, and we were at that time had just started the migration. I will not say I had started, but we were still thinking. But with this talent coming in house, product, tech, data, MarTech, right, entire business team getting revamped. So I think all this helped us to fast track that, and we were at that time there was a very interesting problem which I would like to discuss here, that we had this dilemma that should we go into a 2 app migration, you can continue the old one, and should we have a second Play Store listing, versus should we migrate all on the same app ID, which is like, right,
Sure.
classic MarTech problem, right? You have your SEOs, you
Yeah.
have what tag campaigns. We took the risk that, and we had, by the way, examples without naming the competition where the 2 apps were running, and they were running for quite some time.
Sure.
Okay, and there is always a philosophy that you can gradually shift
Yeah.
the entire traffic on the other side, including the discovery of the app, right? But we took a punt that one app will work. That will give us, it will be risky, but then we'll put all our thrust on one. That will ensure that there is no backups. Okay. We did this trial with beta almost for a year. It was not like that the second app was not there, but it was in
I would
beta.
call it as much a punt then.
Yeah. But the main app in production on the day was almost like just one.
Sure.
It was never like you didn't had. So we had obviously some loyal customers whom we had to have some teething troubles, because you were not just changing the skin of the app, right? We were also doing the entire backend changes. We have ruggedized in technical language the stability. We followed a principle we followed in, generally we use a lot in STARS, STARS. Simplicity, transparency, availability, reliability, and swiftness.
Okay.
And you will hear them in a lot of our blogs and all our stories, right? So these were the core crux of everything which we were doing, right? So the app used to be, while we were transforming, it has to be simplified, okay?
Of course.
It has to be made more transparent in our domain, how much trade and charges are impacted,
Sure.
right? What are we doing with your money? Has to be extremely
It's a very
transparent.
trust-driven category.
Absolutely. The availability itself is a big question, right? You have put in a trade and suddenly, right?
Right? Very sensitive.
Absolutely. It has to be a very tactile feedback on the app, right? Reliability itself, right? You can't go down, right? You are playing with, obviously, again, with
Serious money.
transactions.
Of course, any point of time.
And then the speed. So all this, I think, this is a classic example, I think, where this new team was able to deliver that. And now I think that has become a benchmarker for us.
You know, Ankit, would be interesting to zoom into this new team. What was the composition and how this was brought out in the journey of the last 3 years? Because usually you'll prioritize a few things which are, let's say, the most urgent to get in. And sometimes you'll find good people and you'll plug them in anyway. So how is this people mapping with the key functions that you had to pull together for this organization? And maybe let's zoom into your part of the organization, because obviously there is a larger context, but then I'd love to zoom into the whole product org itself and say, okay, these are the sort of people we brought in first, then we did this, then we did this, then we did this. What was the broad sequence?
So first to start, as you said, we'll just drill down on the product. We had a product team which was working. Okay, it was not like I just set it up everything, but we definitely augmented it with a lot of new talent. The first big thing was that my entire product org is, for example, slice and dice into some verticals and some horizontals.
Okay.
For example, design and data was horizontal. They were kind of servicing everyone, right? And there were few vertical parts, starting with, say, first of all, core equity B2C. We also have a B2B play. So there is a B2B vertical, there is a B2C vertical within equities. And then within this orgs, there are fairly senior PMs, SPMs who are fairly capable and independent. They were brought in. One other thing as a product leader, which I have realized, which is different from travel e-commerce, is that in this kind of a domain, it takes time for people to go and get running. Okay, it's kind of very deeply domain oriented.
Which is what I was going to ask you. Is this a lot of people with a lot of experience, some experience, relevant experience? What kind of profiles do we pick?
So one thing, my promoter, when he was hiring me, and I had, by the way, no experience, okay, of trading, right? I was coming from travel. So he said that we have enough domain knowledge. you get the right people, even if you get generic, I think we have the capability that they will.
Domain knowledge we'll take care of.
Absolutely, absolutely. And knowing Angel, I think that was the trust that, right? At least
Anyway, it's not like there was a large supply of people who had a lot of domain knowledge in this side on the tech first world. So
that also is for sure. We have been, I think, again from the technology side also, we have got few avid traders also as techies, same in product domain. But I think others all have learned on the go. But what we have been very patient is that give them autonomy, give them good problems to solve. And this is a fairly high throughput kind of a domain, right? Because you get spikes during the day expiry when the market opens, when it expires, right? You have Thursday expiries. So you need to have a high throughput systems running. Your uptimes have to be key. Your iota of errors has to be much lesser, right? Because you're playing, as I said, with decimals there.
Sure.
Right? And then this was just equity. We had verticals like mutual funds, which just came in.
Which have just emerged now.
We are the second largest in terms of direct mutual fund SIPs, new SIPs being open. And we have that product just 8-9 months in. Because of the value of now the distribution is coming, right? You have so much footfall on the app, right? So
$2 million is a lot of footfall, clearly.
Okay. But so this is how I'm saying these verticals were distributed.
So you have brought out data and design is horizontal. You had somebody looking at B2C equity, B2B equity, and then what else? Mutual funds is a line of product.
Correct.
And these are all somewhat autonomous senior product managers with some degree of not necessarily relevant but experience to understand
exactly. Domain was not
domain
so much
expertise,
of
not necessarily.
Barring, I would say, few whom we can call it as SMEs, subject matter experts. Charting is a very domain expertise thing. For example, it goes into technical analysis. So we have some talent there. Our entire core transactional play becomes very key domain stuff. But I think all of this team has been groomed organically, not just.
But one of the biggest wins that you would imagine being the customer-friendly user interface or experience that you talk about and pride yourself on will end up being a big shift from traditionally what a bank's stock app looks like. It's a nightmare from a usability point of view, right? And that's where there's a substantial thrust. And was this a conscious thing that you knew on day zero that you have to look at it differently because you come from a very different industry where usability ends up being the deciding factor between app 1 and app 2, right?
No, I think this has been, by the way, a tough dichotomy, in fact, conundrum. So if you look into the personas of our app, the people who are coming in, we have die-hard traders, and this is the one, by the way, who have been flourishing on Angel, not just because of new things coming, but they have been probably loyal.
Sure.
Where a few families whose third generation is trading on Angel. And these could be far younger millennials, right? And then
the first ones had probably called the broker to make that happen. The second ones started with the application. The third one is now savvy, started off with the app itself.
The app first. So that's one kind of a base which has been trading regularly, high frequency. They take larger bets and they have been there. And they are through and through traders. They know. And then, as I said, the last 3 years we have been a lot of first timers who will embark on this journey. At some point, they will pick their segments where to trade, where they will be in derivatives or equity, commodity. They will kind of start, but the starting has to be extremely simple because you can't have barriers there, right? Unless you stick on, you come in. If you are confused what to do, our job is as a product and team, right, to ensure that we have guardrails there, we have hand holding there, right? So I think all those stitches have been done with this new app. Now it is, it's a same screen where you need to solve for both this kind of
that's only
extremes.
Realistic available.
Correct. That's
which is why the whole strength on usability and staying with the team topic till we get to a bit of a conclusion there is that's a primary topic across most mobile app companies, given the amount of time and attention you have is finite. So from the team architecture, you spoke about some horizontal setup and a couple of vertical setups. What was the evolution like? Was it something which you kind of set up as a foundation play that, in my first quarter or two, I need to solve and stabilize this because this is going to become critical for anything else we want to do? Or was it something that, part one, this, Soldrin, and then keep moving while you'll keep building as you go along? How was the team building approach?
Fantastic question there. So I think, as I mentioned, our first word problems were that this data team was set up, and then whether our instrumentations were right, because I knew that this gestation will go.
And data itself is the last topic, right?
Absolutely,
Because you will
correct.
want just the data flows for the app to function, but then there is a lot of analytics, and then there is potentially ML, and then there's potentially
Correct.
bunch of other things you want to do with it.
Correct. I would say that we are still 60-70% there. Today
Okay.
we have got our funnels right. We can capability to monitor is right.
Sure.
We have started doing some AI ML based experiments. We are still early there. And
You know, Ankit, I'm going to keep taking you back to the team topic, because when you hired your first data guy, was he a data scientist or a data engineer or a data infra guy, or what would
he was
look
head
like?
of product analytics.
Head
That
of product.
was exactly
So it
the
was
designation.
sort of big, top-down sorts.
Absolutely.
And then he built his team ahead.
Correct. We had few analysts. By that time, they were you can say adjacent to the product managers.
Sure.
They were working, but we didn't had a great
An
leader there.
org.
Absolutely. So that org inception started happening.
So it's
And
kind of a similar bet that was taken on you, that you took on somebody who may not have come from the industry, but was a good analytics guy, and he became the head of product analytics.
correct.
So the entire product analytics stack started to get built with him.
In fact, just 3 months back, 2 months back now, we have an entire independent org outside of product. It's called CDO has joined us, Chief Data Officer, which will kind of further groom it. But I'm saying this journey in 2 years.
It's a journey, which is why, the part that gets very easily glossed over in very quick panel discussion conversations is this level of detailing, right? So product analytics became a critical component for you to solve. And now UX and design you mentioned, which was the other horizontal, but a critical component to solve. What kind of people are these? Where do they come from? What level of experience are we talking about?
For example, our head of analytics joined us from Intuit. Okay. He had worked in banking in US, he had done his masters in US, and then he came in fairly deep. And that time, that's why intentionally it was product analytics. It was not data analytics. We wanted to solve the product funnels first.
Sure.
Okay. Now today, when you can say that you can merge in business analytics and general data, and then it becomes like the analytics org, which is like the independent data function. So first, what problems was again with the new app, can we have the instrumentations right? Can we have the capability to monitor things real time? Can we attribute rightly, which is very, very important, right?
Yeah.
First clicks, last clicks. In our space, by the way, what you mentioned, right? These different kind of personas will take different kind of routes to put their data. Someone will use charts. Someone will use a watch list. Someone will put an order. If I'm an investor, probably I'll just go to my portfolio and keep buying more.
Yeah.
Right. So there are different. It's not like a 1 point attribute. It is the pattern you will follow. Okay, few people will do ABC, others will. So for us, that org was a very, very fundamental org. The second one, as you said, that entirely the design org. We had some outsourcing designs. We had some partners who used to help us. We brought in line.
You chose to kind of get external expertise because it was hard to hire in-house, or it was like the expertise available?
I would say go-to-market at that time was for us was
speed.
Important. Speed, and we were banking on with very capable partners again who were helping us. But I think lately we built that talent.
Over period, you tend to build this in-house, but you couldn't have done the same thing for product analytics. That had to be done in-house. Design, you could still find somebody else to do it, but the judgment on what's going to work and what your brief is still all yours. So that the, let's say, high-level ownership is still in-house, but you can get the execution done externally in some sense.
And then each PM which you mentioned was, these PM have been groomed beautifully. They have been given a lot of autonomy. If I am leading
so you brought them in raw, or what was the typical experience of when somebody joined you as a PM?
I think initially it was very overwhelming. I think one thing which we kept interesting with these people was hang on. Okay, we are changing. The app is changing. The org is changing. Right, and then you are asked to do some re-engineering work, right, which is almost like reverse engineering what has been running, right? We have some interesting transformations which we did in the last 2 years with these PMs was that monitoring the pulse of our customers. So we also have a customer success program manager. Okay, who runs a horizontal.
This is a part of the product org?
Yeah.
Okay.
He runs a horizontal track that all the feedbacks which are coming from all channels. So we have 4 or 5 channels, by the way, and we have been. I would say very astute in now, and I can say very proudly understand what the customer sentiments are from our customers. And for example, we have something called contact ratio, which is simple number of people, unique people who are reaching us inward, denominator of the number of unique users who have transacted in a day.
Okay.
So day on day, you get your contact ratio. Your contact ratio should move down. Each contact is a cost, right? Each contact is a friction for your attention, right? So, and most of the contacts could be because of your product, because of your business. It could be your charges. It could be something from, by the way, we have our humble friend regulators who are product managers for us, right? This is a heavily regulated space. So this channel of contact, VOC, we call it voice of customer, which is for all the internal customers, which is with our customer service team. So we have a very close track that all these PMs understand what is going on in their areas for which customers are reaching out. For example, if I'm acquisition, by the way, one of the vertical other pod has been acquisition pod, which I didn't mention.
Within the product org itself.
Within the product org.
So this would be the one that will collaborate the most closely with the marketing side of things.
Absolutely.
So the landing page funnels and the install base and activation and all of that. Okay.
And since we are regulated, our KYC has to be with some minimum steps. There is eKYC, there are some signing, there is some bank checks and blah blah. You do, right? So that has been a great point. We have just incepted 2-3 months back. We have started dedicated on retention pod also, where we are trying to look into how installs, what's going around. There is some lifetime value for our customers, right? And we have also taken, since we are moving into a super app kind of a model, which our latest campaigns talks about that. We will have some new products coming in, just not direct mutual funds. We may have lending coming in tomorrow. We may have insurance, and we may be selling FDs and so on and so forth. So we have.
I'm going to ask you some probably basic question, but is that retention pod and acquisition pod horizontal or vertical?
To me, this is vertical. Okay. There is a handshake where your acquisition will kind of leave it,
but
and then
your acquisition is largely driven in one particular category, 2 categories, or how does that predominantly work?
Okay, so that way I think it's from a product org, I will say it's vertical, but yeah, when you acquire a customer, obviously you acquire for all the stuff. See, I would say that way also it's still vertical, but we at some point it will become horizontal because we have been an equity player. Okay, so today when we acquire, we don't acquire for a dedicatedly say for lending or mutual fund, but at some point
for equity.
At some point we will.
So the whole cross-pollination will become, I think, a charter for your retention guy to cross-sell, upsell, whatever.
Absolutely.
But the acquisition collaborator in the product side is ensuring that the inbound funnels or whatever traffic is coming in is converting and activating in the most effective way possible. Right. So that's a more horizontal play in some sense, and I wonder if it'll get vertical at some point. But more important than that, it's a lender being the retention guy to now look at cross-pollination of all shapes and sizes to say the entry point was equity investment, but now this guy can potentially be a valuable user for all of these things.
All other asset classes.
And from that lens, the size of this org will be a proportion of what are the different things they're looking to offer and how many segments are coming in, right, in some sense. So what I see in terms of your journey, your analytics came in, your design kind of brought in subsequently. It was partly outsourced for a bit in between. Then you had a customer service side of interfacing where people would know what's happening on the pulse of the customer. Then now you're talking about the acquisition part, and then you're talking about the retention part. And this is where the evolution is being. What is the size of the org, if you can just put that number in perspective? We
have close to 400 plus tech team. I have close to 50 plus PMs. And these are, I'm just talking about PMs. We have close to 20 plus design team, close to 23 exactly, precisely.
So 50 PMs, 23 designers, 400 engineers.
We have
all of it goes to making that app work.
And we have analytics of close to 30 plus.
Okay,
which is part of the data org now.
And analytics, which is now this is going to go beyond the product analytics.
It'll balloon.
But product analytics will also merge with the data analytics.
Correct. Now we'll have obviously some bit of data integration layer. We'll have a AI ML layer. We'll have ML ops. So that'll have its own, let's say, charter. One thing just to add on, when I was saying on the customer track side, right, we had the customer success program manager. So we have these 4-5 channels. One I told you as VOC. The second one is the NPS. We have been, I think, one of the few orgs which has been able to crack, because there are no public numbers on NPS, right? You will see in some blog somewhere that NPS is. And obviously there are US stats like, say, Netflix NPS would be, say, 60 plus. At that point, the flywheel will start rotating, right? People will start referring automatically.
The word of mouth matters.
Absolutely. So we have, without disclosing the absolute, but we started from abysmal low. So, and we have this, I think we have cracked that algo well, that we have something called touchpoint score. Okay, because we have different journeys, right? So if you are a chart user, we'll prompt you at some point through our campaigns or through a native nudge kind of a platform which we have built in internally, that how do you like this? Okay. And if you obviously rate us as a detractor, we'll try to get a reason, just the 2 questions. So this aggregate of these TPS, and these TPS are now being prompt, say, once in X days frequency, 60, 90, so that we don't bother you, but you still, you can rate us.
It's still a lot of feedback that will come in every day.
Absolutely. So across, say, close to 10 precise journeys, we will ping you, and aggregate of this will become your NPS. Okay, this touch point score will lead to an net promoter score. This net promoter score, what we have realized is that over a period now, While it will fluctuate on one day or other day, but the broad aggregate trend is a very good pulse of how your customers are doing.
Fair
So
enough.
this is gives us almost like it keeps us on our toes. If you have a review which is a detractor who has actually not liked this, we will immediately get a pulse. And all these PMs, including myself, I think we have this charter that we look this granularly week on week.
Okay.
And I think we have a fantastic trend there. We disclose in our public results, being a listed entity, that how it's inching north. So that's second one. Third one is the entire feedback on App Store and Play Store, which is the common,
Which is
I
a
think,
public
the
information,
currency.
but it's a good pulse, sure.
Correct, absolutely. Today we are rated around close to 4.3 on Play Store, 4.1 on App Store, and if you look into historically, we have come a long way. In fact, during the migration, there was a time when we were looking at a dip because a lot of the loyalists were not liking what we are doing. We holded our fort, and I think that's
We
going
came
on.
around.
And the fourth one has been the way we reach out, right? Just very recently, we did some workshops. We continue to, being a B2B and B2C mix, we continue going feet on street. We go down, we keep meeting our traders, what they are doing, our partners. We have a decent, in the B2B team, we have a decent BMs, business managers who keeps giving us what is going on in the pulse, right? So we take all this, filter it, harmonize this, and constantly I think this goes into the roadmap. So I think that has been honestly a challenge as a product leader, that you take a customer problem, you also take into a business problem, you take a revenue initiative, and that's how do you squeeze in your...
And then you finally prioritize it, because
Absolutely.
ultimately the engineering bandwidth will be what it will be. So very interesting approach. I understood the people side of things. I'm going to get a little bit on the technology stack side of things in terms of what was the support ecosystem that you put together through this journey. So you have to do product analytics, you have to have a product platform which is going to enable you to do this. Some of it might also mean build versus buy conversations, because you've seen enough of that journey as a tech leader across your previous avatars. So did you choose to build anything from scratch? Okay, this is, you mentioned the whole nudge bit had to be built in-house because maybe there was no external solution that would solve the problem. So what was this broad evolution like in terms of the pieces of the puzzle that you brought together?
Interesting. So I think, yeah, as I mentioned, it has been I would say, assembled kind of a play, not.
I think that's become the most common practice now. Assemble it the way you care about.
Correct. Something you built in. Our entire Click stream, for example, we have built in all ourselves.
Okay.
We don't use any.
The entire Click stream you're capturing yourselves, and it's dashboarded in-house.
Absolutely.
Wow. Okay.
The visualization is on Tableau. On Amazon
Really?
Cloud, we have pretty much.
You'll embarrass a bunch of these product analytics tools, but okay, this is impressive.
We are on Redshift, on the warehousing front.
Sure.
We have entire pipelines which we have set up. We have the best in class, I think, on the cloud, which manages it within the analytics. The entire tech stack, by the way, we have revamped. The entire backends have been rewritten in Golang on the engineering front.
Was this like an approach when you came in that we'll build an MVP first, get rolling, and then keep expanding from there? Or was this something you already knew that this is how it has to be done? So we build it right for the first time?
I think we went for the second one. We knew that it has to be done in this way. And I think we have been, good thing with the new rollout has been now, Ankur, is that our capability to experiment has gone far better.
Of course, that's the underlying infra that's available to
absolutely,
experiment.
Right. The entire, we have almost like the entire mutual fund, if you access within Angel, it's almost like a trusted web app we call TWA, one of the best performing apps in the industry by Google standards also.
Sure.
So we have few native play, we have few trusted web app play, we have few screens on Flutter. I think, yeah. So that's
all been choices made consciously.
And I think we continue evolving. There also, I think what would be, as I mentioned, with the STARS framework, I think we need swiftness and reliability are, I think, two very key aspects.
Yeah, which becomes interesting because a lot of times in the interest of speed versus, in some sense, quality, sometimes people do tend to take quality for a toss that, okay, we'll rebuild it when we have to, but right now we're in a very aggressive competitive situation, so we have to get this out in a certain time frame. How do you deal with these decisions?
Very tough one, honestly. I think there is always a pressure that can you do it?
Yeah, right. I want it tomorrow.
Correct.
Or maybe yesterday, right?
I think so. There also, it's a mix and match. Few of our tracks within the company, I would say, are, for example, the entire, we call it a new NBU, new business units which are coming in. They are relatively more agile.
Sure. So it's like a SWAT team which will turn things around fast within their world.
Correct. There is a bit of matrix structure there. The product was very keenly with business. Business has a, you can say, a hand on how prioritizing, because they need to ship out faster. The sprints could be lot more shorter in cycle.
Sure.
On the other side, on equity, for example, in this year after migration, we have been trying to become more predictable and more planned. Okay, so we are trying to literally. Few people joke that this becomes like a large IT service company, but we feel that this is how it is needed because we have done that something. And during migration, we were like shipping every 15 days. But now, since we have a very decent large base, you can't surprise them every other day, right? And regression becomes a very big problem in kind of our kind of play. When you have a predictability, it means that things should work.
Yeah.
It's okay if you don't ship something for maybe a 15 day, that's okay. But once you have shipped something, probably it has to work.
It has to be a way more reliable.
Absolutely. Correct. I think we are coming into that stage where we would be, I think, much more smarter with our ABs. Our experimenting frameworks will come in. Still, I would say not there 100%, but those things I think you will see, I think, more and more on our apps coming in. So I think this side of equity, it's almost like we have gone into very, very granularly how we plan our sprints. How
steady state now. So in terms of the evolution also, I mean, there's only so much more that you can do with that specific experience.
Absolutely.
In some sense. And the additional components wherein the new products are going to come in is where probably the new space to experiment will lie. That's where I would imagine you'll not experiment in the entire base. You'll take a small little subset and you'll do something with it.
Correct.
Make it work and then expand further from there.
And that's why on this predictable side, I think, on the stable side, we need to be as product, as tech, as analytics, we need to be predictable. Can we bring a foresight that when we release this, it's almost like the PRD, if I write, it should say that this should be able to move this matrix. There has to be a lead indicator by this percent. Because it may be utterly wrong. We will monitor it obviously after 15 days, but the art and science of writing it that way and giving that right gumption look is very, very needed in this much. On the other side, I think you can iterate and faster and you can fail faster. I think that's
so in some sense you have like multiple products now running within the larger org because this is stable, steady ship going. Don't tinker with it too much because the room to mess up is very little. You have pretty much zero room. This is the experimental space. You want to work with a small audience. You can play with it a little bit here and there, but I mean, obviously within the boundaries of maintaining the brand reputation. It's a very trust-built kind of a category overall. And I wonder how forgiving people are to some of these situations when things don't work out. Did you ever have a downtime situation where a critical hour in the market in your app is not working and you had to deal with it?
No, big time. Actually, we have it. We had it. In fact, there are so many, I think, players beyond your app, which could be unforeseen, right? Dependencies, right? You have depositories like CDSLs, you have KRA agencies, you have exchange itself, right? And obviously our humble SEBI is there, right?
Of course.
The big daddy. So I think, there could be ecosystems which can fall flat so I think that's where I think we are also trying to become more resilient. Do we have backup services, right? Do we have redundancies of that? Our internal play on just the notifying capability, right, of turning around a bad sequence of events and bringing it up, surfacing it early with a probably, if not great accuracy, to say a majority accuracy that okay, this has gone down, it will come up in this much time. This service is not there. I think that's where we are trying to go deeper.
Lots of pieces of the puzzle to be put together, and I think the size of the puzzle keeps expanding in some sense. Because there's always more.
But what you just said, right? We are roasted, I think, on that way. That if you go to our Play Store reviews, and anytime something is in this ecosystem is not working, obviously that.
It's the nature of the game. It's a high stakes game. It's a high involvement affair for most people who are using the platform.
That's why reliability continues to be a very, very thick of this stack. Awesome. One more other thing which we have kind of helping us to kind of iterate faster, even on this side of which is the core balance side, which you said, right? The equity side is that we revamped our entire web platform, and we feel that the desktop trading, right? Because these are heavy traders, okay? And you have large real estate there, right? Be it on charts, be it you have to look into watchlist parameters. So we have revamped that along with the app, and now we are seeing a great traction there.
What's your broad split between desktop versus mobile in terms of DAO, let's say?
Our close to almost like our 80-85% is, by the way, Android, 10% is iOS, and 5-6% is...
That's super small, but very aggressive.
But they're very sticky, right? And interesting part is that the consumer behavior there says that while I may not trade from web, but I will probably open it as a second screen and watch it, and then...
It's something like it's always on, right? For some people, it's a second screen which is there, which you'll keep watching all the time.
So I think that's where we feel that all the mature pro trading fraternity can actually utilize that more and more. And because this overall funnel will kind of grow.
Keep growing.
Right? So I
It's
think
a power
that's-
user in some sense.
Absolutely.
Got a little bit about the people side of things, a little bit about the tech side of things. Maybe there is room to go a little deeper in the tech. Is there anything that you made a choice, okay, this is a piece of tech which we need to invest in upfront, and you build some of the analytics stuff in-house already. But apart from that, there are more tech pieces that get involved, right? So there would be, let's say, a data lake that you would have brought in. The amount of data you're dealing with is insane. Was there ever a cost question that this much of data is going to cost so much and we need to rethink this or something of that nature? How do you deal with this?
I think that way, again, the entire I would say management again has been, we were very pro 2 years back. I think we shifted a lot of our stuff to cloud. Okay.
Yeah.
By SEBI guardrails, we need to have something on-prem. The core trading can't move in there.
Sure.
But all the ancillary stuff has been now on cloud. We are supposed to be having excellent backup strategy. We are DR.
Data retention as well as backups.
Correct.
And those are regulated, so you can't kind of do much about it.
So we have just upgraded our infra, that side. We have moved to a better data center. The earlier one was plagued with a lot of legacy stuff. Right. So I think those things are also play a very, very important role.
In your reliability factor, right?
Absolutely.
Data centers, if they
Correct.
go down, you're like, okay,
Correct.
nothing can be done.
Correct. We have, we are dependent on our order management / risk management system, which are third-party systems which interact with the last mile layer with the exchange. So we are ensuring that we are attempting to write that of our own. Today it's kind of a universal player which supports also. Yeah, this core equity to support, I think, is a very technically, you can say, challenging stack with this scale.
That's also where you're choosing to replace some parts of the pipe that you have
Absolutely.
with the external ecosystem in some sense.
Correct.
But you have the appetite to do that now because everything else is sort of stabilized and the equity team can afford to invest time in some of these other components.
Correct.
Interesting. On the MarTech side of things, then there is this whole term called CDP, and then there is
Absolutely.
all of those things that support the advertising side of things, and then there is this whole campaign management, and then there is engagement data coming in. How does that look for you?
Pretty interesting. So I think, yeah, we are also in our phase of enriching our CDP. We already started this journey quite long back. I think 3 years with that, when I mentioned that our instrumentation has started coming into play. So this has started enriching. Today we have close to, I think close to 400 metadata each customer, which we kind of
All
aggregate.
those 15 million KYCs that you've had.
Correct. And I think it's a long way. Be it your, as you said, starting signals of all the way from KYC, or what you have given to us.
Sure.
Your first trade data, how do you behave on the app? Right?
The whole clickstream, right? Yeah.
Absolutely, correct. And this is very interesting, right? Because we have very swinging personas, right? On one day, as I mentioned, you will be doing X things. Other day, you will become probably an investor. Our core goal is that you keep engaged and horizontally you spread your wings, right? You should have a stock SIP also. You should have a mutual fund SIP also. You should trade also, correct? And that's how you'll be more sticky and engaged, right? So you have, I think, huge number of data points coming in.
Yeah.
This. I would say we are still at a stage we will just start leveraging this. Today we are in terms of augmenting this into our CDP. Entire post-trade bit is very, very interesting for us. We have seen a lot of anxiety in the customers when after they trade, right? Post-trade funnel, right? How is my reports? During taxation season, there would be a deluge of people who are looking for, is my P&L plus, minus, there is long-term capital gain, short-term capital gain. If you're an intraday trader, you have a day P&L which is coming in, right? The entire bit of, though we are into discount trading, still people will figure out, right, how much they are paying us versus they are actually, there is government taxes like STT, statutory charges. So all this leads to a lot of, earlier it used to be, I would say, not by design, but by the simple lack of, I think, bringing it on the app because of real estate and usability. I think now it has become very, very transparent. Thanks to the regulators also, it has become transparent. So I think that funnel started working very well. And as a result, we see our customer interactions on those queries have also started reducing, which also helps us in long-term retention.
Operational efficiency as well.
Operational efficiency, right? So this I think is all knitting together well.
So in terms of bringing all of this data together and enriching your CDP is, in some sense, you've gotten phase 1, phase 2 sorted, but there's still more work to be done. But are there data sources which are not coming in for your CDP yet, and that's okay to wait for a certain time? What would those be?
I think, for example, just the inception of now new products, and we need to tie it, right? For example, if you have come in and you have done a mutual fund SIP, and you've been doing it for X days, as you said, right, at what point we should start upselling you, cross-selling you, right? Should we nudge you on equity now, later, or the other way, right?
It's just all orchestration choices. What I was curious more about right now is what happens a lot of times is when somebody imagines a CDP, this seems like a behemoth of a project, right? That have to have all of these data sources together, and then it has to come in, it has to stitch together nicely, it has to start to make sense, I have to do segmentation, analytics on top of it, then perhaps create my first campaign. So in that sense, the whole time to value seems like really far off.
Oh,
and what I'm trying to understand better is there a room to kind of close smaller loops to say that, okay, you get this stuff in, you do this with it, there's some sort of outcome, some sort of output value created, and then you can keep expanding that scope. How do you see that?
I think the answer is somewhere in the middle, as you said, right? You have some quick wins. For example, if we are collecting say 40 attributes are on your portfolio or 30 attributes, right? A simple say use case from the CDP could be that whether you're when you are exiting if you are a positional trader and if you are exiting your portfolio, and you are about to do that in say 300 days versus 365 days, your entire 15% versus 10% would have actually made a difference of 5%. I'm saying now short-term gain versus long-term gain. Now that's a very cool hack, right?
Yeah.
Just the data tells you, right, that please don't do it on X day. You should have done it X minus Y. Now similarly, if your portfolio is considered very biased towards say one kind of segment, say you only invest in IT, okay, but the banking is probably doing well, right? So this is portfolio right, diversification.
So in some sense, what I hear you do is a lot of analytics on top of the raw attributes you've collected and put a bunch of derived attributes to the user.
Absolutely.
And that seems to be a large part of the CDP play in that sense that you have all of this raw information. I mean, you have to collect that data and to process it to answer the fact that he's an IT preferred buyer, because it might not show up in the raw attributes to begin with.
Absolutely.
And likewise, more behavioral
and likewise,
parameters.
these are quick and small wins while you do the stitching, as you said, for a long. See, the CDP should ultimately able to tell me your persona is X,
Everything.
but that's like
it's an ongoing journey, right? You'll keep
journey.
expanding.
Correct.
I don't know if I make one trade, will you be able to tell me my risk appetite? You won't be. But if I do 10, maybe you will be. And then that's where the whole maturity is an evolving game. But the room for quick wins exists is what I was trying to establish, that okay, if you can do something with the initial set of data you have, there's always room to put that in execution. Because what tends to happen is, whenever these, generally what we're seeing, these large implementations of new MarTech and new CDP stacks, it's a year-long project. By the time you get to anything which is meaty, you've already lost track of what you probably originally started out with. In some cases, the companies have had even longer implementation timeframes, which means that the team that actually started this whole project seems to have moved on, which ends up becoming like a whole question mark on the MarTech subject itself, that is this worth our while? And to me, that's like a big waste, because there's so much you could do with just maybe a quarter bit of some integrations in some sense, right? So that's interesting. But so the CDP part is one piece that I understand. From the engagement side of things, is this something that you're already across as many channels as you need, because you're also dealing with a large country with multiple languages, multiple geographies, and multiple interest areas? So how do you deal with that side of things at this point?
I think, I would say still we had at one point experimented with, say, just on the localization bit, with some partial localization, I would say. Our honest answer that time was that it was not worth the effort. Okay. Though, by the way, a lot of our acquisition and a lot of our customers are from tier 3 and tier 4 today. We feel that with whatever basic, thanks to the entire ecosystem which has come in, I think they are able to, being in English today, whether our app isn't in English, at one point we may move on to different languages. But I'm saying the effort of doing that was not worth the ROI.
What's very interesting is I have a different example from the lending ecosystem. I don't know if you'll get there anytime soon, but that ecosystem, they were putting about 30 paise for 8 rupees worth of, 1 rupee worth of money for 8 rupees worth of loan disbursed. And then they went vernacular across the board, and there was not too many languages that you deal with. And that moved them to 30 paise for a 24 rupee loan. So it's almost a multi-X improvement just by switching languages in that sense, because perhaps the nature of the market they were dealing with was such. But regardless, let's come back to the tech stack question.
Maybe that will be a problem at some stage, but today
so language is not the lens to worry about right now. But from the engagement stack, the channels, is there a topic that, okay, these are the 5 channels that would work for us, because a large number of people might or might not be active on email, but you have apps on their phones, so pushes would work. Browser pushes might. What are the channels that you think are actively working for you?
The best ones are being, as you said, the push works, the in-apps work, right, for sure. I told you that we have invested on partially on our own internal product. We call it GRIP, GRIP. the capability through grip to target a cohort.
This is
obviously,
in the app itself during the experience?
Yeah, absolutely, during your journey. For example, we have, say, something called SEBI mandatory funds flush out, right? So whether it will be 30-day or 90-day, depending on your preferences. Now we need to ensure you that you have X amount which will be going out from our wallet to your bank account. And we want, obviously, ideally you should come back, because it's inconvenience tomorrow when you'll suddenly come to trade and you'll find out of balance.
The money is out.
That entire grip run nudges help you preempt you
that from happening.
Absolutely.
Sure.
A lot of our activation, or say after activation trades, where we are just apprising you that your portfolio, we recently had something like super portfolio, where we give you a consolidated
single view
that,
of everything.
Absolutely, that you are not on mutual funds, you're not on, say, bonds, SGBs and all. So that helps. So any of such nudges, we have new indices keeps coming in, right?
And this is all on the grip.
This is all on the grip. So that helps a lot.
In some sense, you chose to build this than license this.
Absolutely.
Again, a question of maybe cost structures, or maybe capabilities, or maybe just the tightness of flexibility you wanted here.
So both things. I think we wanted here. The last one was very important, that the congruence of this in-house was the stickiness, and the way we were implementing it. We thought that the entire freedom which we'll get with this one was far higher, and our capability, I think that way tech was. We were confident.
So I don't think, in my impression, the capability is never in question. It always is the prioritization that's in question, right? Because you always have more things to do. But regardless, if it's such a critical component of your business, it might just make sense to control that more tightly. So, okay, that's a lot of interesting bits about the people, tech, data side of things. In some sense, I'd love to zoom in on the external context of where angel broking today stands. You're not in a very free space, in some sense. It's a competitive space. At the same time, there is headroom to grow. There's some room for category creation for a lot of people who are going to do this for the first time.
Absolutely.
Help us understand in terms of how digital transformation has made it possible for you to compete with the digital natives, while there'll be a whole bunch of other traditional broking houses which have not gone through a similar aggressive transformation, who are likely losing market share. So what's your impression of this whole context?
Yeah, I think we have been astutely, I would say, nimble-footed. I think, again, thanks to the promoters, they were able to...
They got you in to begin with, right?
maybe that's also part of an answer, but
Sure.
But for sure, I think the foresightedness, that exactly as you said, that we would have lost the ground if we would have not taken that seriously. And again, it comes from the top and it has to percolate to the bottom again and again. And as we say that, still, I would say we are 70-80% there. We have a long mile to go again.
I'm sure.
On a question of just the ecosystem, right? Absolutely, the top 5 players are the digital players today, who acquire almost like 75-80% of the new DMAT acquisition share. And there has been legacy players who are challenged. A lot of bank brokers definitely are losing ground. They need to obviously rethink the strategy. We are seeing a lot of consolidation in terms of the super app play. I think each one of them have taken their different routes. Some are coming with, say, dedicated apps for different use cases. I think conviction has been that it has to be a one app which should be able to solve. Doesn't mean that one large monolith. It could be an app in app kind of a structure. But we see that with the new age youngsters coming in, if we are able to service them with different use cases, this customer has a lifetime value of almost like 30-40 years, starting from the first, say, equity trade to, say, or a mutual fund SIP, to, say, at some point as they mature, they may look for a, say, two-wheeler insurance. They may look as we expand into lending, which will be probably a big play, a need for a personal loan. So all these are, I'm saying, example of touch points, right? The expansion would be coming from largely tier 3, tier 4, the new age audience which is coming in, and that's why all of this will be what you mentioned, first to the market. 2-3 things which will ensure that this goes long mile is having hand holding of such customers early, right? Can we simplify that again on the stars thing, that what we find that is there a iota of confusion, what should we do next, right? Should be able to proactively tell them, right? A bit of education, learning in our domain helps a lot. That also is a financial literacy play, whether you transact with us or someone else. I think we are the category creators, so we need to take that onus of education. Customer support, we are a big believer that it should be all self-serve kind of a model. Okay, you should ideally your app should be able, right? Your queries should be able to resolve rather than, and that's why I mentioned early there is a contact ratio, there is NPS. We feel that those touch points should be as minimal and
In
as
some
self.
sense, what would give you the competitive advantage or the relevance to stay with the next bunch of tier 3, tier 4 users, the first time traders, is would you kind of credit that to the usability or the whole star framework you spoke about, obviously, but some of that is table stakes now. So, what do you think your edge will come from?
I think I didn't mention, but as I mentioned, we will be starting off our personalization. We have some bits of personalization
Sure.
space that will give us definitely an edge. Today, in what step of your journey you are there, the app definitely is cognitive of that.
It's cognizant of that, okay.
Okay. Again, there is a chance of fat fingering in our space when we do too much of personalization because we don't know how that context switching will happen. So I
Sure.
think that's all some things we'll learn. We'll leverage our CDP at some point to
course.
kind of bifurcate, dissect that.
Yeah.
But yeah, there are some clear cohortizations which is coming in. So that should be able to help us in that game. And as I mentioned that this young millennial lot, we have a strong feel that they want to figure out themselves, right? You need to just assist them rightly. You can't right handhold them to the T, but at the same time you should have to give your cues, right? For example, something like first time user experience, which is usability part of it. So if you are new to a say sub product or a segment within our app, we definitely give you experience that this is how it will pan out, like this will look like this, right? So those are, I think, some of the elements which from the usability perspective, from reliability perspective, a bit of personalization angle, okay. And I think ultimately all comes together with the trust in our domain, right? If we can knit it all together, we can be very transparently telling that this is what is gonna be happening. I think this all comes well.
So in some sense, while there'll be table stakes which will elevate because the consumer expectation has obviously gotten much higher than what it was maybe even 3 years ago, the battleground weapons will end up being data-driven personalization, continuous effort and usability, trust building with respect to all of these new users who are coming in. Their trust might not be because of the brand you have, but because of the experience they personally had in terms of how you behaved at various stages of their engagement and how they perceived you. So which is interesting because the field is in some sense level. All of you have access to the same amount of underlying customer information perhaps, but who applies it more intelligently to the end user's experience will end up having a continuous play.
Absolutely.
But this is not a winner takes all market. But I'm going to switch to the whole consumer experience side of things. But maybe as a segue into that, does a typical consumer have multiple app relationships, or is this more like a typically single relationship? Because the total trading base of India is at a certain scale. You have majorly 5 apps with maybe a dozen odd legacy apps which are playing in this market. What is the typical persona, which is an active power user of you today, look like? And how does that change in terms of there'll be so many more people who will trade once a month versus so many more people who will trade once in 6 months? How does the user ecosystem look?
I think, as I mentioned early on, there would be a few minority who would be very vocally trading. They would be astute. They would be understanding this through and throughout. And maybe these are the people who are earning their bread and butter by this. Okay.
Full-time traders.
Full-time traders, right? They are not just there because COVID came in. They were there and they've been hanging on. Maybe COVID kind of just boosted that number to some extent. The other lot would be a lot of passive traders are coming in. This also kind of correlates with all the passive funds, passive things which are coming in, your ETFs, your mutual funds. We're seeing that will also increase over time. Okay, a lot of new AMCs are coming in who are kind of boosting that. So this kind of user would be investor kind of a persona who would leave it. The Indian economy will grow, the market will grow. They will continue with the market.
Buy and leave it alone sorts.
Absolutely, right? These are investor personas, whether in equity or mutual funds. Then there are obviously within the between these two extremes, there are different kind of traders. There would be someone who's taking a position. There is a swing trader, which we call somewhere between intraday and positional trader. There are intraday ones, obviously, who are taking bets on. So I think that your platform should be able to serve all this. Okay. There would be, I think, journey interventions for these. If we are able to find what exactly this user is, which I said is slightly complicated, right? It's not so clean, but there are still signals. For example, as I said that if we know that you are a heavy trader, maybe your intervention that for this chart, your web view is far better than what you are probably straining yourself on the app, can actually be a great way, right? So I think these are the kind of interventions. One great other insight which we have seen is that our iOS pieces, by the way, shaped up very well with the increasing Apple devices in the country. In last 2-3 years, it has become phenomenal, and each of them personas, as we know, slightly more deeper
Savvier, so to
invested,
speak.
savvy, absolutely. Now, a lot of our another trend which we have seen is that a lot of these Apple users may have a secondary Android device, okay, because they are able to afford an Apple. Probably they have one more cheaper Android for whatever reason, or a premium Android for that matter, right? So this understanding this, that multi-device play,
patterns.
correct, how you're panning out, what are you doing? I think all this helps a lot. I think these are few stitches we are doing around. The entire, as I said, that the entire, again, having different asset classes also just helps us.
A lot of various kinds of consumers and their behaviors and the way to deal with them would be different. But given that the category is growing and there's a lot of first timers coming in, and that's where maybe it's also the economic bracket within the urban kind of ecosystems, and also the tier of cities where this is expanding, the age brackets of when does somebody start making his first investment is also expanding. So from your lens, if you were to break down the whole market into major 3 or 4 or 5 user personas, and this is where my segue to the journeys of each of these personas would come in. What would be the top few personas? You mentioned the whole heavy trader, which is web first already. You mentioned the positional trader versus infrequent kind of guy who will invest periodically in a systematic fashion is the second guy. Who else is a major persona? And I mean, I'm asking from the lens where the journeys of these guys in your system would look a little different from each other. And at a systematic level, you'll orchestrate them differently. So what would be the top few? And you could also potentially say that this is going to be a lot of micro segments. But in some sense, is there like a top 4 or 5 major personas that you deal with?
So as I answered, that these are the two extremes. Now on the investment side, it could be, for example, we have, say, people who are coming regularly, say, for a stock SIP or a mutual fund SIP. Okay. We have a retention play that while people have started mutual fund SIP, they should continue investing longer. And at some point, as I mentioned, can they switch? Can they diversify towards equity? Okay. Within equity, for example, we have a guy who could be heavily on equity and staying invested as a portfolio holding, right? But then the customer realizes that there are funds which have invested in the same equity. Might as well buy that fund. Okay, which further diversifies, right? So I think with the investor persona and the trader persona, a novice comes into our platform and it will slice into these. Okay, there would be a maturity curve when they will move to a trader persona, and usually a lot of the first timers could be on the delivery side initially, and then they will become an intraday, and then they will go to a slightly risky bet of derivatives. Okay,
and that's a classic journey you would envisage most people
absolutely,
will take.
absolutely.
So if I were to think about the people entering the ecosystem at this point, it's largely the equity-led kind of play. So people who come in for equity transactions, hopefully they've converted their KYC, and I'm guessing there'll be a certain level of leakage there as well, which you'll want to plug. But let's say they've done their KYC, they've done their first transaction, maybe made a small equity investment in something. From here onwards, what are the different paths that they would take? And from a retention and engagement standpoint, is there a communication philosophy that you have that you will sell, educate, not oversell, not advise people on anything whatsoever? How do you philosophically look at the engagement side, given that your space is kind of regulated, kind of also ethics,
absolutely,
in some sense?
Yeah, it's a very, we have to trade on a very thin line there.
Absolutely.
KYC done, then you get your activation done, which is with the way we define our activation is the first trade done.
Correct.
Okay. With the maturity of, by the way, the other asset classes coming in, this activation may not necessarily be equity.
Sure.
It is initially equity,
It'll get
but
more
today,
broad-based.
yeah, for example, I told you we are already the second largest in our first SIP mutual fund.
SIP.
So a lot of now customers may start with mutual fund SIP, or lump sum on mutual funds. Then based on the user, and there is a time frame, right? Say 3 to 6 months this persona will take to graduate towards a trader persona. Now within trader there could be micro segments, right? Swing trader, positional trader, intraday, whatever, right? Segments.
Give me one example of any of these micro segments as to how did you articulate the segment basis the behavior patterns, because ultimately this is all coming from some kind of product usage data or transactional data, which you are now classifying as a persona. My worry tends to happen is, whatever your retention product team looks like, ultimately it'll start to have that many more variables and that many more personas and segments that how many, let's say, journeys you're going to design. right? And that becomes a topic of concern as well at some point because it has to scale. And if it gets too fragmented, you don't necessarily know what the different content that has to go on each of these paths and how frequently it has to refresh, because it's an operational nightmare as well. So is this a product side issue when we do the retention guy who's doing all of this? How does it overlap with the marketing org, and how do you orchestrate some of these executions?
I think I would say a mix of all this. So, by the way, that also helps me answer that, articulated in this way, that today retention is spread across product and business. It's not, by the way, either or. It's and right. And within business, there would be growth and say core revenue team, right, which is more on monetization and retention. So it's again split. Okay. And there are two tracks, I think, which are horizontally supporting this. For example, communication as a play, right? Whether we are communicating, who of these are communicating. So product will also do product valuables, which will intervene. For example, are we launching, say, more and more sticky products? I'll give an example. For example, we recently did basket order. It's a basket of orders. You can do multiple orders in one shot. It's almost like a cart thing. You keep adding and then you do one shot. So all the heavy traders require that. We did something called trade from charts, okay, where while you're looking into the graphs, you can actually trade from there. We have, just on the retention side, as you said, as a persona, we have best practices like if you put your stop losses, if you put your alerts, chances are that you may completely not devoid of losses, but you will be probably better off than those negative surprises, right? So these are the few interventions you can tell these new people that, okay, you started putting your stop loss, this is kind of the order you should, normally will help. This is all core on the equity side, okay, because then these heavy traders tend to become risk management practices have to come in. So there are interventions, I'm saying, which we come in. The sheer execution part of this, that, as I said, lies between product and business both. The communication and the data is the horizontal which binds this, right? So communication can be done by a product also. Communication can be done by, say, for example, few of the retention campaigns can be done by the business also in this case. It's not just product, okay? Product, talking about my org, for example, we recently did a CEO's newsletter and we got one of the best read rates on that email. By the way, email, as you know, doesn't give anyone in this country, I think, great, I think, numbers. And more so for us, because as you mentioned, while few orgs may be define that we will communicate lesser or be very meticulous about it, we have a strategy of slightly overboard there. We think that the customer may decide what to do, what not to do. We have some notification configs where you don't want to receive something, you can definitely opt out. But then we are not conservative, I would say. It will be unfair to say our DNA has been that let's go and communicate. So between growth / business plus product, I think we have a fair play on who's communicating all. There are obviously some ground rules that this much you can't do. And by the way, a lot of that I would say is still in baking. Okay, it's not like we have hit the nirvana there. So whether Ankur will receive something different or Ankit will not, I think to some extent we have done. Largely on the app, communication would be far more personalized, but off the app channels, across channels, right? I think that's where we will
still work in progress. Okay,
still.
Let's just take one user persona and his retention journey from here. I'm a new trader. I've started with one stock investment, and now I've shown some amount of behavior, maybe the amount of the ticket size of my investment, the time between when I came in to the time I invested. I'm assuming each of these are parameters that you care about and you look at, right, as to what kind of persona I'm dealing with here. And how would my journey navigate? What would product do? What would business do? And where would you want me to transition from here? Basis what behavior?
Right. So answering the product part first, the first, I think, hiccups which we see in this journey is before even you take your first trade. Okay? So you're acquired, you're discovering, and being new, you are probably confused, right, from where to start. Now, there are different ways, right? The stock discovery, for example, is an upcoming thing, which is you will see. Our search will probably help you in that. Your recent search is what you have done. It could be, by the way, biased because of your profession. If you are from a pharma sector, probably you will look up to pharma stocks.
You asked me that question? How do you find out from
No, I'm saying from your searches.
Sure, from my searches.
Right, so it could be adjacencies to that searches, right? If you have invested, say, for for example, a lot of people will just go to say Nifty 50 because they know that this is
Straight and
is
simple.
straightforward, right? Maybe we'll probably try to show you say more Nifty 50, right? This becomes your onboarding experience. This becomes like, this is on the app, okay? So next time when you come back, when your app goes in background or you're probably killed in and you come back, probably it'll start from there, right? So that's some basic context
Housekeeping.
there. Once you have done your first trade, then more and more, I think, based on that data and the behavioral data, right? That's actually transaction done. So we have got some transaction data, we have got some behavioral, right? We will then probably nudge you. For example, if you have been on the charts coming frequently, we have again an intervention called, if your FNO, for example, is activated, which is derivatives, there is a quick to kind of a derivative product called Insta Trade on our app. Okay, so that helps you very simplified version of an options trading where we'll give you a very simplified 3 strikes. One of them you can take it, you can predict almost like that whether Nifty will go up and down, and you can take a strike on Nifty, which is an underline, and you can start off. So I think these are some examples which will help you to move to the next step. Okay, we are trying to still evolve this and make it like much more, I would say, concrete, and say that this is probably the second or third step you should do. Today there is a choice there, so you can still get confused or figure out yourself. But I think it will be even better that if we are able to tell that out of these, after the first trade done, these are the 2 probably next things you should do. Catch in this system is that, as you said, we'll have to learn. Okay.
Yeah. The next best action is going to be based on intelligence, and it might look different for different people. So maybe at a conceptual level, if I were to think of this, and the product lens, you like the word growth hacking a lot. In my impression, the world where product managers are doing all of this work on retention, there'll be tons of growth loops, so to speak. You know, at this point of the user's journey, you made this small intervention, which should have ideally sent him this way. 50% people will go, maybe 50% will not go, and this loop completes here. And this is one little automated journey. And you might have hundreds of such little automated journeys in play, right? Because for us, a power user on the platform ends up running 100 and maybe sometimes even more than that journeys. Because on an everyday basis, you're not going to tinker with everything. You will change some parameters so it improves your click rate, your open rate, your conversion rates, your end outcome. But in steady state, you have lots of these things going on at the same time. And the product manager level or the retention marketer level, it's not something that he's going and doing a blast campaign every day.
No.
You choose a segment, you choose a certain funnel, you choose that leakage, you fix it in some fashion, partly maybe, and over a period it'll keep getting better and better and better and optimal. So conceptually, if it's the set of finite people doing this, any which way, there's no way you can have a large number of individually crafted comms being sent out every day.
Absolutely, I think. No, I think this has to be with very sacrosanct set of few defined set in hands, right? Few hands should have to be able to.
Because what's very interesting is there's a world of people where I know that there is a large copywriting team and perhaps sometimes an HTML design team to define some 300 odd HTML that they have to send out to those 300 odd segments on an everyday basis or every twice a week kind of basis, which seems very hard for me to scale because, you know, the more segments you create, the harder it will get for you to get copy. And at some point, the copy org also will cap out on the different segments you'll create.
Correct. I think that's
so it turns out one of the problem statements being faced by people is when they're trying to scale content, the cost of getting copy done itself starts to shoot up. And which is odd because, I mean, ultimately you have to templatize and automate most of this. And which is where the irony of a product org versus a marketing org lies. Right? So marketing org is very obsessed with great copy. The product org thinks automation. So you will find those little loops. The basic copy template components aage piche, but the components in between will end up being the personalization tokens that you will get from the behavior in some sense. So Ankit, you called something, you used the word nirvana, and I'm assuming you have a fair picture of what that would look like for you. Would you help us break it down for a little bit as to what the nirvana means from the user engagement communication lens?
Okay. Yeah, I think in maybe very crisp way, if we are able to define that this persona will be happy with this quantified number of, right, say this much messages of this cadre in their, say, different phases of evolution on a platform, probably that's nirvana. Okay. Now,
okay, that's a very crisp one. You have to break it down a little bit.
Yeah, let's break it up, because I think also what we are seeing is, right, see, the entire tenuity of the users on who have just come in, it's like this deluge has just come in, so they will also learn. So we can't predict that, by the way. The user who has just joined on the platform, and just joined means like 6 months back, how it will pan out. Okay, while at a macro level we can say that there are needs of this customer, need states which we need to answer, but whether he or she will need it today, tomorrow, right, how many times, I think the macro level, we understand that everyone will come back and invest probably long term in an SIP. They will have holdings, which ideally should be patient enough. But right today, they have a need of probably or they get a high on a trading today. They have to. We can't. I'm saying put a barrier there, right? So that's why I'm saying that chances of going wrong, if we fragment it too thin, are fairly high. Okay. Till we have a substantial base to learn from, and our CDP plus our behavioral analytics for our transaction data plus in the regulatory within that regulatory framework.
Yeah.
Okay, because by the way, that's also changing very frequently. So KYCs which are done now may not look like, by the way, similar when KYC will be done say 1 year down the line, because 2 years down the line, because I'm saying as you mentioned, right, probably there could be few overlaps with whether it's a existing broker customer or a new customer. We may have some information passing in. Recently we saw this interesting intervention from India Stack, right, the entire account aggregator. Okay, the consent framework. We have utilized that, by the way, in our activation play for FNO, where through customer consent we can take the bank statement. Now all those will play a huge role in say other products, right? Tomorrow in
also
lending.
help reduce friction in a lot of spaces.
Absolutely. So I'm saying the more and more people, and it's not just Angel, right? The more and more people will give the consent on the consent framework, the next acquisition will become actually very easy for everyone for probably a different asset class. Okay.
Sure.
Right. So I think all this will pan out quite far, very differently. So I think the only way we can answer your question is that be nimble and agile, keep learning on this. And if you have a broad, I would say, capability to probably tune in, that's far better than knowing exactly solving it today. So I think that's where we are hinting towards, that we should be prepared better. And more, which I mentioned earlier, that as a product org, if we are able to do these experiments and learn this more than before we roll out, I think that's where ultimately the answer would be.
It's very exciting for a 25-year-old company like Angel Broking to be able to talk this language today, having spent the last 3 years building this entirely tech-first, almost digital native org with people coming in from the right kind of backgrounds, and the fact that you want to be doing more experiments and more A/B tests and more real-time learnings from your own platform and your consumers. Thank you so much for doing this, Ankit. This was extremely exciting and informative for me. I hope you had a good time as well.
Thank you. Thanks a lot.
So the story of Angel Broking is an interesting one, truly that of a nimble-footed legacy giant. For a 25-year-old company to now still be relevant in the age of very, very digital native savvy players, the likes of Grow and Zerodha, they've really come a long way with respect to their investment in technology, UX, as well as data science. The fact that this is a top-level commitment from the founding team really shows in the way things have translated and transpired over the last few years. It's really fascinating how Ankit obsesses over the STARS framework, given that it's a place where people park their money. It's very serious for them to have it simple, transparent, available, reliable, and speedy. You can always imagine the implication of a platform losing out in one of these places, and then this causes a massive breach of trust, which would be very expensive in this business. The part that I also find fascinating is Ankit comes from a 16-year travel industry background, which is to say that you actually need people with more the hunger to learn and grow and do new things compared to domain expertise. Here's wishing Angel One, the new platform, the super app, the best of success.